Wealth creation is the process of increasing your net worth and financial well-being. It is a goal that many people aspire to achieve, but it is not always easy or straightforward. There are many different methods and strategies that you can use to create wealth, depending on your skills, preferences, and risk appetite. In this video, we will explore 5 of the most common and effective methods of wealth creation in the modern world. In method number 5, special situations, this is not a common way because it is one of the most opportunistic and dynamic ways to create wealth you need to know. I will explain what each method entails, how it works, and what are the benefits and challenges of using it. Let's get started. 1. Entrepreneurship. It is the process of creating, launching, and running a new business venture. Entrepreneurs are people who have a vision, a passion, and a willingness to take risks. They identify a problem or a need in the market, and they come up with a solution or a product that can satisfy it. They use their creativity, innovation, and problem-solving skills to develop something that is unique and useful. They also use their business skills, such as planning, marketing, financing, and managing, to launch and grow their ventures. Entrepreneurship is one of the most powerful ways to create wealth because it allows you to be your own boss, to set your own goals, and to reap the rewards of your hard work and innovation. Entrepreneurship is not easy, though. It requires a lot of dedication, perseverance, and resilience. It also involves a lot of uncertainty, competition, and challenges. According to the U.S. Bureau of Labor Statistics, about 20% of new businesses fail within the first year, and about 50% fail within the first 5 years. Therefore, if you want to become an entrepreneur, you need to have a clear vision, a solid business plan, a competitive advantage, and a strong team. You also need to be flexible, adaptable, and willing to learn from your mistakes. 2. Stock market investing. It is a way to make your money grow over time by participating in the performance of various businesses. When you buy a stock, you are buying a small piece of a company that is listed on a public exchange, and you become a shareholder. As a shareholder, you can benefit from the company's profits either by receiving dividends or by selling your shares at a higher price than you bought them. You can also lose money if the company performs poorly or goes bankrupt. To invest in stocks, you need to open a brokerage account with a platform that allows you to buy and sell stocks. You also need to do some research and analysis to choose the right stocks for your goals and risk tolerance. Stock market investing is not a get-rich-quick scheme, though. It requires a lot of research, analysis, and discipline. It also involves a lot of risk, volatility, and uncertainty. According to the S&P 500 index, the average annual return of the U.S. stock market from 1926 to 2020 was about 10%. But there were also many years when the market experienced negative returns, such as minus 37% in 2008, minus 22% in 2002, and minus 26% in 1974. Therefore, if you want to invest in the stock market, you need to have a long-term perspective, a diversified portfolio, a sound strategy, and a rational mindset. You also need to be patient, consistent, and willing to learn from your successes and failures. 3. Real estate investing. It is the process of buying, selling, renting, or leasing real estate for the purpose of earning a profit. Real estate can be divided into 4 main categories: residential, commercial, industrial, and land. Each category has different characteristics, advantages, and disadvantages. Residential real estate is usually the most accessible and affordable type of real estate for beginners, such as houses and apartments, but it also requires a lot of management and maintenance. Commercial real estate is usually more expensive and complex, such as office buildings, retail stores, and others that are used for business purposes, but it also offers higher returns and longer leases. Industrial real estate is usually the least affected by economic cycles and consumer preferences, such as factories, warehouses, and other properties that are used for manufacturing or transportation. But it also requires a lot of capital and expertise. Land real estate is usually the most speculative and risky type of real estate. but it also offers the most potential for appreciation and diversification. These includes vacant land, agricultural land, and natural resources. Land investors can make profit from developing, selling, or extracting land. Real estate is one of the most tangible and stable ways to create wealth because it provides you with a physical asset that can generate income and appreciate in value over time. Investing in real estate is a complex and costly way to create wealth, which requires not only capital, knowledge, and management, but also a lot of taxes, fees, and regulations. 4. Alternative investments. These are financial assets that do not fit into the conventional categories of stocks, bonds, and cash. They can be a powerful tool for investors to diversify their portfolios, reduce their risk exposure, and enhance their returns. However, they also come with some challenges, such as higher fees, lower liquidity, less regulation, and more complexity. Some of the common types are commodities, hedge funds, art, antiques, and collectibles. Commodities are things like gold, oil, or coffee that people buy and sell on markets and can protect from risks or benefit from changes, events, or innovations. Hedge funds are groups of investors who try different ways to make money that are not related to the market and can borrow money, use contracts, and sell things they don't own to increase or decrease their profits, but they ask for a lot of money. Art, antiques, and collectibles are valuable things that can grow in price, make people happy, but cost a lot to buy, keep, and protect, and can be fake, stolen, or damaged. Alternative investments are not a risk-free or easy way to create wealth, though. They require a lot of expertise, research, and networking. They also involve a lot of complexity, illiquidity, and unpredictability. 5. Special situations. These are any events or circumstances that affect the value or the operations of a company or an asset. They include things like mergers and acquisitions, spin-offs, restructurings, bankruptcies, and activist campaigns. Special situations are one of the most opportunistic and dynamic ways to create wealth because they allow you to capitalize on the inefficiencies and the anomalies that occur in the markets. Special situations are not a common or straightforward way to create wealth, though. They require a lot of information, analysis, and timing. They also involve a lot of uncertainty, competition, and legal issues. Therefore, if you want to invest in special situations, you need to have a lot of data, a deep understanding of the business, a favorable valuation, and a catalyst. You also need to be alert, opportunistic, and willing to learn from the market movements and the corporate actions. In conclusion, there are many different methods and strategies that you can use to create wealth in the modern world. The best method for you depends on your personal goals, preferences, and risk tolerance. However, no matter which method you choose, you need to be committed, disciplined, and willing to learn from your experiences. Wealth creation is not a one-time event, but a continuous process that requires constant improvement and adaptation. Thank you for watching. I hope you learned something new and useful. Please leave a comment below and let me know what you think about it. I'll see you in the next video.